Hello, folks. Welcome back to Market Junkies. This time, we're going to take a little look at Lemonade. And by the close of this series of two videos, you're going to be equipped with the knowledge to determine whether the stock is a buy, hold, or sell at current levels. Let's get into it. So, who are Lemonade? They're a US based insurer headquartered out of New York. They operate in four EU countries today and also the USA. Floated back in 2020, July to be exact, opening on their premium day at $29, and they ended that very day above $69. Since then, they've risen to the dizzy heights of $150 plus and come crashing back down to earth. They now today sit marginally above their IPO price, currently valued at $35, or in market cap 2.19 billion. They're a real disruptor, okay, and they disrupt by leading with tech in a legacy sector. What they're doing is leveraging a progressive tech stack, which is a blend of AI and behavioral economics, in order to deliver really precise premiums for their customer base. And what's interesting as well is they're both a broker and an insurance firm, okay? So they have that risk element with the insurance company, but also the brokerage piece. So when you buy a policy from Lemonade, that 20% brokerage fee goes immediately to the broker, of which they actually control. So they're keeping all of their, I guess, they're keeping the money in house, I think is the best way of thinking of it. So public float currently sits at around 38 million. Shares outstanding, a little bit more, 61.64, but nothing really to concern yourself with today. So the industry, what is the insurance industry? Okay, essentially it's a market in which security of the unknown is protected against in exchange for a premium payment. Ben Franklin, and this it highlights the fact how legacy it is, established the first insurance company in 1752. Fire insurance to the town's 15,000 inhabitants. The company still exists today, somehow, is now a mutual holding specializing in home insurance. Now, for me, and it should do the same for you, it highlights the lack of innovation that they've seen within the sector for 250 plus years. It's crazy, but they are a Goliath sector as well. The US of A, I don't know why I said it like that, represents 1.28 trillion. That's according to the S&P Global Market Intelligence, and then 5 trillion globally. Statista have that rising to 6.4 trillion by 2025. So you're seeing a circa 6% rise per year in what is largely a legacy industry. It's kind of huge. And that's actually, those views are compounded and driven forward, and they expect a tailwind from Swiss Group. Now, their lead economist has actually stated around the insurance market is that they believe that positive pricing momentum is going to continue across every single line in region due to inflation driven higher claims developments in all lines of business. They believe that with the continued social inflation in the US and obviously Europe as well, and persistently low interest rates, they're going to be the major factors for that market hardening towards their aims. And they believe that it's going to actually surpass that 6% growth for next year, or for the next 12 months, let's say. And I want to discuss the legal requirements of insurance. What these businesses have done a fantastic job at is having insurance written into legislation. You'll see it yourself. You've got to get a car. Oh, bloody hell, I've got to get insurance as well. You buy a house. Oh, okay. Well, actually, 90% of mortgage lenders require that you have house insurance. If you work in shipping, we've got to have ship insurance. And then there's the list goes on and on and on. Building insurance is another example of that. But what they've done is those that are written into, I guess, law, but also that it can be widespread, are of course the most profitable. So those policies that are the most profitable are auto insurance and home insurance. Lemonade operate in both of those pretty damn heavily. Equally, the third sector there is life and health insurance, of which Lemonade operates in life insurance but not health, which is interesting. And then we have like the emerging opportunities to discuss. Um, COVID, of course, pandemic-related financial issues. That those policies have exponentially grown over the last 24, 36 months. Alongside that, we have the climate-associated ones. You know, not a day goes by where we're not, read to about the risks of the future 10, 15, 20 years. And if you live in sort of tropical zones in which you could receive sort of damage from these types of extreme weather, it is well, it makes sense to take out an insurance policy. Again, it's a growing marketplace, but one that I do want to touch on is actually the pet insurance market within the States. And this represents a really strong opportunity for Lemonade, who have recently entered into this marketplace. So 68% of US households own a pet, which is huge anyway. Only 2% have dedicated pet insurance, which is really, really quite interesting. So It's been growing on average of 24.6%, I believe, over the last 5 years, and that's set to continue. What that represents for the guys at Lemonade is actually being a leader within an extremely heavily growing space. And if they can migrate existing policyholders into that world, I mean, fantastic. And now we're going to touch on the positioning of the business today. So they offer homeowners, life, renters, car, and pet insurance in the United States and somewhat across Europe, but that's set to grow. They do this and they're doing so well because of their data driven approach. The CEO has been cited in a recent interview stating that they receive over 100 times more data points per customer than traditional insurers. Okay. What they actually do is they leverage regional data on crash and break-ins and things of that ilk, as well as their predictive AI and their other customer data points, which allows them to, I guess, associate risk to each individual policy. And in the long term, what that means is that, or in theory, the risk associated with each policy is completely understood, and so their profit margins um, can be maximized. And then we have pet insurance, which I mentioned there. So I won't go into too much detail, but you've got 2% that have dedicated insurance in the States today. Annual growth rate of 24.2%. Apologies, I believe I said 6 on the previous slide. But this is where it comes in really interesting around how they price their policies. Okay. And this is worth listening to. So long-haired Dachshunds are 22% more expensive than insuring a normal Dachshund. Okay, what they're trying to do is price its insurance on the basis that the long-haired trait is affiliated with health risks arising out of breeding practices. Okay, in practice, a lot of veterinarians and pet owners, they don't really decipher between short and long, particularly in medical records. And the average actual pet owner may unsuspectingly pay thousands more out of pocket by selecting a more expensive version. Now, that's great for the insurer, terrible for the customer. But it gives you an insight into, I guess, what they're trying to achieve and how pragmatic they are and risk associated they are with each policy holder. And also on that, actually, if you are to become a pet insurance holder with Lemonade and you hold an existing policy, you get 10% off. So it represents a strong cross-sell opportunity for sure. And I think that dovetails quite nicely into where they are from a marketing perspective and the basis in onus they have on this. So today they've got 1,363,754 customers as of the end of Q3. Their entire marketing spiel is insured in seconds, paid in minutes. It's clear through the amount of customers they've brought on that this model really relates, and I think customers see a real benefit in it. Okay, also to add to that is what they've actually created is almost like a community feel around the premiums that customers pay. So they've projected that it's not their money, it's yours. So with Lemonade, everything is real simple and transparent. They take their flat fee, they pay the claims super fast, and they give back to you what's left over in that pool into the causes you care about. So when you sign up, you basically choose like certain charities that you would like them to dedicate your excess funds to. Now, this is a pure marketing spiel. This isn't about Lemonade as a business wanting to be great and be considered like good for humanity. It's because they have the understanding of individuals, right? And they know that people want to be like aligned with companies or things that are doing good things. And so, again, it wouldn't surprise me if their data points have actually pushed them towards this type of strategy. And even in turn, that allows them to add more and more data points to each individual. It's genius, to be perfectly honest. And then we've got car and the new car product and Metro Mile acquisition. So it's worth having a little look to the right there around that graphic, where you can see that you've got Lemonade, which is the growth machine, the brand, the really good and strong customer experience, the products, they like upselling, they like cross-selling, as well as the capital to back them up with what is Metro Mile. Okay, so they have car specific data science and insurance expertise within the space, but what Metro Mile is it's basically mounted precision sensors. Okay, they've already been market tested. They've done 400 million plus road trips. They've covered billions of miles, and what it does is it sends real time data to the Metro cloud. So then they map it out onto behaviors around how much somebody will drive, when they go, when they drive, like what time of day, where they go, and how they do it. So the speeds in which they do it, right? And they cross-reference that with actual claims data, yielding off the back of that really precise predictions for losses per mile driven, which is, it's the way that any car insurer should act, but it's just not the done thing in today's marketplace. Metromile believe that they've got a 10-year head start on the legacy players within the industry. Okay, which is real interesting. Because that in turn should stand the organization in good stead to be a market leader within the states pretty damn quickly. And I think the figures behind this acquisition are really important too. It's $500 million, and that's an enterprise value of just over 200 million. That represents 2 times their 2021 IFPs. So you're almost paying 2 times the revenues, which is pretty interesting because to me, that's cheap. And the reason I believe it's cheap is because the way in which Lemonade cross sell and try and get customers on multiple policies, because they're also taking in, hundreds of thousands of customers that can be cross sold to, as well as the technology, as well as the recurring revs, as well as the insurance expertise of the employees that they've absolved, because the idea is that they're not going to be sacking many. That's what they've stated in the acquisition notes, that they're going to keep the majority of these people on board, which in turn will push this business forward. So that product in itself, I think, is in a really, really strong position. Okay, and now the management. So we've got Daniel Schreiber, who's the CEO, and the management team. By the way, please listen to this slide because this is an important one. So he was on the board of directors of Paramount Tech. They're a wireless charging solutions tech business. But what's interesting is he actually went through an exit previously, where he was sort of I think, hold on, let me have a look, the vice president of marketing and business development at SanDisk and M Systems. So M Systems was what was acquired by SanDisk in 2006, I believe. Please correct me if I'm incorrect on that, guys. And then we've got Shai Vinegar. This guy's just, I love him. He founded Fiverr in 2019. We all know what Fiverr is, right? They revolutionized work for many. They opened up the freelance world massively in the gig economy. So this guy's revolutionized an industry already. Brilliant. Then we've got Adina Exton. So she served as their COO since July 2021, but she was also the COO of digital channels at HSBC. So she was leading the charge at bringing one of the world's largest financial institutions into the digital age. So again, experience in modernizing legacy businesses. It's going to come in handy, right? Because it's all about being progressive in this business. Then we've got John Peters, bottom left. I mean, this guy is just insurance through and through. He's come on board and he was the Executive Vice President of Commercial Insurance Operations and Chief Underwriting and Product Officer for regional companies group for Liberty Mutual Insurance in Boston. You need the insurance lead still, right? Then we've got George Espinel. Love this guy. Chief Business Development Officer since 2018. He was actual global biz dev of Spotify, right? So it's really interesting because again, it's another individual that's sat in a space that's revolutionizing industry. Okay, it's all about that slick design, messaging, and digital approach. And Spotify have actually revolutionized the way we interact with music. And this guy was a key figurehead for that in around their growth aims. And I believe he's going to execute fantastically well, as he already is, but it's going to long continue here. Please forgive me for the pronunciations of the next two. We've got Silvija Martinovic. I'm so sorry, I've butchered that. So she is on the board of directors. She's actually currently chief commercial officer for a firm, again, revolutionizing an industry there a little bit anyway around the personal loan space. But what I love is that she worked with Groupon. She was the chief marketing officer of Groupon's international business. Again, what did they do? They created their own market around discounted products and experience, all digital and all highly scalable. And then we've got Caroline Seidman. She's the CEO of Clear. She's on the board of director also. And they've revolutionized ID via biometrics identification. Current valuation of that business is 4.5 billion. That's what they floated at. So pretty heavy hitters. I think this management team is exquisite because every single one is around revolutionizing, bringing something into the digital age, all around growth, and that's really promising for where Lemonade are going, particularly in the industry they sit in. This brings a close to part one. Please tune in for part two, which is going to be released at the same time. It's going to be about a 7-minute video just to finish off. Thanks.